So, you have a friend who follows a guru and he trades CFDs, foreign exchange, or options. Well, first up, I'm aware that this is a very controversial topic, and if this video does not enrage you into an anger fit, I ask that you leave a like, purely to balance out all the dislikes that this video may generate. So, if you're tempted to sign on to a trading platform that enables you to play the share market so you can make some extra money on the side, you see the ads of the bar charts and it seems like an exciting and easy way to maximize your downtime to make some easy side money. You're aware that 99.9% of persons who trade in this platform lose money, but it's okay because you have a friend that has a subscription service to a guru, or he gives you a bunch of rules to follow, or you can copycat their trades. Or maybe you've even noticed a chart pattern yourself that always repeats. I've seen this so many times and I've fallen for it myself in my early investment years. As a former sucker of this business model, I know that you cannot be talked out of it if you're already sold. The only way to break free from this way of thinking is to take the painful losses again and again. If you're tempted to follow your friend into this trap, all I ask is that you just sit out and wait for the first year. If they're still making money after 1 year, feel free to follow them in. But I'm very confident that they will not last a year. There are a minority of traders who do come out ahead, but their gains are lower than 10%, so they would have been better off just investing in the market index ETF, as that requires no work. And so I'm clear, there's nothing wrong with the people that sign up to these programs. In point of fact, I actually highly respect them, as many of them are taking the first step and trying to get ahead in life. I do believe that the majority of these people will become successful investors in the future, and they're just learning the first harsh lesson. Today, many successful investors have horror stories about how they started off and how they lost a couple of thousand from this form of investing. It is an expensive lesson that many of us have learnt the hard way. But if you're still on the fence, I will attempt to persuade you not to sign on. Let me try and give you a lesson for free that most investors had to pay thousands of dollars for and had to face a bit of embarrassment. Now, the first reason that these CFD options or derivative products is that they're not designed for individual investors. They are designed to be an insurance. So I'll give you an example. Let's say Smokey runs a business that sells selfie sticks. Selfie sticks sell for $10, and it costs Smokey $8 to manufacture them. If the price of selfie sticks were to fall below $8, Smokey would be run out of business, and this is way too much of a risk for him. But he can hedge its risk by approaching a selfie stick mass retailer named JJ. JJ offers Smokey a promise to buy his selfie sticks for $10 for the next 3 years for a small fee of 50 cents per stick today. Smokey pays JJ a bunch of 50-cent coins, and the deal goes ahead. If the price of selfie sticks does not fall, Jay made a small bit of easy money for nothing. And if the price does fall, Smokey is saved from bankruptcy. Jay and Smokey are both benefiting from this transaction. Everyone is happy. But now, instead of Smokey buying any option to sell at $10, a new party has swooped in. Jules has only $1 to her name, and she buys the options instead of Smokey. If the price goes up, Jules loses her entire savings account. And if the price of selfie sticks goes down, she'll easily double her money, as Smokey will be trying to buy the option off her. As no one can predict the future of the price of selfie sticks, Jules has the same odds of winning as a casino. Now, I have no problem with financial derivative products being used in the way that they're designed as a risk reduction tool. But unfortunately, too many people are using them as a financial weapon of mass destruction. The second reason I'll give is that pretty much no one has gotten rich from doing this. Yes, there are those guys from The Big Short movie, but have you noticed that these guys have elite teams of mathematicians working for them? Even with having teams of mathematicians and using derivatives to beat the market, it is an exception rather than the norm. One of Elon Musk's biggest complaints about America is that its best minds are being used to try and beat the market rather than advance humankind. If you think you are smarter than a room full of competing physicists, mathematicians, and economists, who all have PhDs, please feel free to try your luck. It is a zero-sum game, and either you get the money or they get the money. And my final reason is, if it worked, wouldn't more people be doing this? These products have been around for decades, so you can't just use the excuse that it's like Bitcoin where older investors do not understand it. Guys were trading CFDs, warrants, FX, and options before you were born. And yet I bet you can't name a single investor who's gotten rich from it, again apart from those guys in The Big Short. And if you do know of someone who legitimately got rich from it, I bet there are thousands and thousands and thousands of stories of people who have lost their entire savings. From listening to some of the derivative market gurus, they state that they can make 1% per day or 1% per week. or that could be 365% per year. But to disprove their claims, I'll even use a more conservative figure. Let's just say that you could double your money every year. So let's say that you can double your money every year, and you started with $10,000. If you continued this system for 30 years, you would be worth $3 trillion. That's not million, that's not billion, that's trillion dollars after 30 years. So obviously, these claims are too good to be true. Either that, or there's secretly a bunch of trillionaires walking amongst us. I truly believe that you have better odds of winning your money at a casino than you do from derivative trading. The derivative trading platforms try to market themselves as credible and proper-looking brokers, but they are not ComSec and they are not NAB Trade. Oh, and I almost forgot about these gurus. They are not very transparent, and very few of them will tell you their real performance numbers. They're either too new to have a track record, or they do have a track record and it's just very, very bad. Again, if you do not believe me, just give it a year and then see how your friend is going before putting your own money in. So, thanks for watching, and now you know what a bad investment choice is, and from my other video, you know what a good investment choice is. So feel free to watch some of the other videos on my channel. And again, please leave me a like, just for the sole reason that a few people will probably leave me dislikes because they love CFDs. Anyway, thanks guys, bye.